Brilliant is a new kind of smart home control, and it replaces a standard light switch. It gives you touch and voice control over all of your smart devices from anywhere in the room. We've been working on this for over 3 years now and are just launching it to market in a matter of days.
3 years of R&D, was there any way for you to factor in tariffs into your business plan?
Absolutely not. This is something that took place over a period of years. Decisions were made long ago in terms of what features to put into the product, how to price it, what channels to bring it into, and a matter of mere weeks before launch, suddenly we learned that it was going to be subject to precipitously announced 25% tariffs.
What's the cost?
It was impossible to incorporate that.
What's the cost to your profit margin?
Well, we did raise prices to compensate partially, but we felt we couldn't raise prices beyond the point that we did because it's a product that's more of an Apple premium product than a Cartier premium product, and that would have turned it into a luxury product. We want to democratize this kind of functionality, so as a result, we had to take a significant hit on the margins for a company that's, as a startup, still going to be unprofitable for some time to come. So profit margins don't mean less profits, it means bigger losses.
So Aaron, initially you raised your prices by $50 per device, and so if you were to raise the price and pass the total cost onto the consumer, what would that have been?
Right now, the product sells for between $299 and $449, depending on which model you get. So it would have had to go beyond that by another, $25, $50, which we felt just made it a different type of.
So it would have been $100 in total if you were to pass the entire cost of all the tariffs onto the consumer, onto what was maybe a maximum $500 product.
Yes.
Is there any other locale where you could make the product? Could you make it in the U.S.? Could you make it in Mexico? I assume you've looked into that, and it was cost prohibitive, or just the techniques and talent were not there?
Exactly. It's not just the cost. China is a unique place because the whole supply chain for consumer electronics is based in China. That's where the components are coming from. That's where the distributors are. That's where all of the various pieces of the ecosystem are. Taking it somewhere else would not only cost $1 million and take us six months, it would defocus our entire organization. Startups are like sharks. Sharks got to swim to survive. Startups got to keep innovating to survive. And we're a 30-person company. To take the whole company and dedicate it to moving somewhere that was riskier, more expensive, and lower quality would derail us. And what's more, moving to the United States is absolutely not an option, because the perverse effect of these tariffs is that it's not only a tariff on things that are manufactured in China, it's a tariff on components and raw materials that are used to manufacture in the U.S. So it has the effect of moving production away from the United States as well as away from China.
So
it's
what are you
more
going to do
attractive under these tariffs to go elsewhere.
What are you going to do?
Well, we've raised the price. We've cut our margins. Right now, we are advocating for a change in the tariff regime and hoping that it stops. If it doesn't, then we're going to have no choice but to stop and move production elsewhere in the world.